Welcome to the Q1 2014 Cushman Wakefield Market Boot video. My name is Jonathan Tizzard and I look after valuation and research in Vietnam. Okay, the general economy started the year in a solid, if not spectacular fashion. At the end of Q1 2014, GDP rose nearly 5% compared to the same period last year. Inflation kept low again with just an average of 0.27% rise each month, representing a 4.83% rise year on year. So foreign direct investment into Vietnam in the first 3 months of 2014, including both newly registered and additional FDI capital, was recorded at $3.33 billion US, which is down nearly 50% year on year. It remains to be seen whether this is just a temporary blip. It is a house view that the lack of large projects in the last few months has skewed the results. So manufacturing and processing led the way for total registered capital with nearly 70%, and Korea remains the top investor into Vietnam. In terms of the wider economy, we would have liked to have seen the Vietnam Asset Management Company maybe start to sell off some of their bad debts that they have on their books, but we believe that the first deal is not too far off. We also think that the Trans-Pacific Partnership, which is the trade deal that reduces all the levies and tariffs between a lot of big countries, talks are underway, and if this happens, then it's going to be a major boon for the Vietnamese economy.
Hi, my name is Hoan. I'm the General Manager of Cushman Wakefield Vietnam. As part of my job, I'm also heading up the capital markets team here. Q1, as usual, has been relatively slow in terms of transactions, but in saying that, we've seen a huge increase in the amount of foreign investors from not just the regional parts of Asia, but also from the US and also Europe. These entrants have been around for a long time. We've been speaking to them for probably 5 years, but now as landlords starting to become a little bit more realistic in their pricing, we're finding that a lot of the projects that hadn't been feasible are now becoming feasible and then far more attractive to these end users. One of the other drivers has been the VAMC. It is still relatively new to the market, but it's really driving a lot of positive market sentiment. How this moves forward will be a very integral part in the, success of the market here in Vietnam. Summing up, overall it's been a pretty positive start to the year from the sentiment base, but we believe this will drive right through to the end of 2014 and into 2015.
Okay, on to the office market. In Ho Chi Minh, the Grade A segment saw an increase in occupancy rates again, of about 3% quarter on quarter, which represents a significant 8% year on year, with the occupancy rate standing currently at about 91%. Meanwhile, Grade B remained unchanged quarter on quarter and about a 5% increase year on year. Grade A rents decreased by 1% quarter on quarter, but that's average asking rents, and by nearly 5% year on year, with Grade B rents remaining stable quarter on quarter. With Grade A space approaching 100% occupancy, we fully expect rental decreases to either disappear or reverse in the short term. In Hanoi, 5 Grade B projects entered the market, including the Euro Window Multi-Complex, Time City, Song Hong Parkview, the Gillette Building and the PV Oil Building, which raised the total Grade B supply to roughly 723,000 square metres, which is an increase of 12% quarter on quarter. Grade A stock remained unchanged at about 330,000 square metres currently. The average asking rents for Grade A continued their downward trend, with a 3.5% decrease over the quarter. Grade B witnessed a slight increase in average asking rents quarter on quarter, but we think this is actually due to the higher than average asking rents of the new buildings that entered the market this quarter. We expect both grades to continue their rental decline in the short term. The occupancy rates for both grades were also slightly down quarter on quarter.
Hi, I'm Alex Crane, National Head of Commercial Agency here at Cushman Wakefield Vietnam. I've been asked to give a quick briefing on different specifications when considering office building grades in Vietnam and also internationally. Firstly, I think it's important to point out there's no right or wrong answer. It's a very subjective matter and everybody has a different opinion. What I would say though is that there are some particularly important parameters. Primarily location. We're looking for CBD location for grade A buildings. We look at the prestige of the building when we consider whether it's an A, B or C grade product. Okay, so physical elements, for example, ceiling height, cleared ceiling height, also floor plate size and shape. Technical specifications such as lifting that are very important in Vietnam. We're in a grade A building, we're looking for one lift for every 4 floors constructed. Ultimately, my guidance to occupiers is to apply your own grade to a building and attach a value to that. Alternatively, if you're a building owner, I would attach value to your tenant and consider what your building has against the competition this tenant may be considering. Grading is a very good guide, but at the end of the day, every deal is different.
Okay, now to the retail market. In Ho Chi Minh City, rents remain stable this quarter, and we expect this to continue in the short term. In the past quarter, one retail centre transferred half its retail space into office, and 3 retail centres entered the market, adding nearly 60,000 square metres to the market, which is about 5% extra. One of the recently opened centres is the Aeon Mall in Thanh Phu District, and even though it's very early in this mall's life, it has thus far been very successful, and we expect it to continue to perform well due to its unique offerings and aimed at an income level in line with the local population, its tenants mix and the positioning. In Hanoi, we witnessed the entry of one new shopping centre, the Ocean Mall in Cao Gai District, one new retail podium, the Hong Ha Centre in Kiem, and the Lotte Mart in the Mi Pek Tower. Rents have started to fall in some sectors, specifically street front stores, as competition from large shopping centres takes its toll. Occupancy rates have also decreased in the street front stores, again with shopping centres and retail centres benefiting from this. However, we have witnessed more vacancies in some of the larger additions to the Hanoi retail landscape in the past quarter, and we will continue to monitor this going forward.
Hi everybody, my name is Kiem. I am National Head of Retail Cushman Wakefield Vietnam. We would like to brief some highlights regarding the retail market Q1 2014. First, the leading Thailand retailer Central has just announced an expansion of its presence by bringing Robinson department store to Hanoi. Starbucks just opened the 4th store in Dong Du District 1. The first store of Starbucks in Hanoi is expected to be open in next coming month. McDonald's served over 400,000 customers in its first month of doing business. The second McDonald's store will be open by beginning of Q2 2014. Dairy Queen, an American ice cream brand, just opened the second store in District 1.
In Ho Chi Minh City, we witnessed the release of 390 Grade A units and 970 Grade C units from 6 current or existing projects. There are also 2 new projects entering the market this quarter, equaling about 174 Grade B units and 320 Grade C. Grade C remains the core product, accounting for 64% of the total stock. There have been some positive market signals recently, especially in the low-end segment, due to its affordable prices, and there has been a pickup in transactions. Amongst the 3 segments, Grade C recorded the most transactions with an average absorption rate of 22%, with prices just over 14 million dong on average per square metre. This is actually a decrease of 6% quarter on quarter. Approximately 83% of all units absorbed by the market this quarter were Grade C, and the absorption rate of Grade A remained very low at about 5%, and Grade B was at about 11%. In Hanoi, the trend of cautious new launch activity continued, with approximately 800 units launched. Relaunch activity, however, was much more active as developers' concerns about clearing outstanding stock outweighed their desire to release new products. Overall, Grade B took the lion's share with approximately 55% of the total primary supply, followed closely by Grade C with 38% and Grade A at 7%. Encouragingly, the first 3 months of 2014 witnessed an increase in the number of successful transactions and an increase in the average selling prices. Part of this is explained by the decrease in interest rates, a supportive credit growth policy, and increasing inflows of overseas remittances after TET. We expect this cautious improvement in the health of the market to continue, unless there is a shock to the economy, such as a spike in inflation or some external geopolitical event. Okay, that concludes our video for Q1 2014 Video Market Beat. Thank you very much for watching. Happy Victory Day and Happy Labour Day if you're in Vietnam. Happy Easter elsewhere. If you've got any questions about real estate in Vietnam, please do drop us a line or write us an email. We're here to help you. Thanks a lot.